Alright, so in this video, I want to talk about my closed trades for the month of January in my margin account only, which is the non-registered account, because this potentially could be income that I could use to start spending. So in the margin account right now, my main strategy is selling put credit spreads only, and sometimes some earnings plays, which is usually an iron butterfly or a put credit spread. So if you don't know what a put credit spread is or an iron butterfly is, I've got a video on put credit spreads that I can link below. And as for iron butterflies, there are so many videos explaining that. I particularly like option alpha videos. So just look up option alpha iron butterfly. He explains it very well. So this is closed trades in January. So the trade might have been opened in December, but it was closed in January, and that's only when it is closed that I can confirm that it is a profit. Once I open the trade, it's not a profit until it's actually closed, even though I collect a credit to open the trade, even though money comes in the account when I open the trade, but I might have to pay more to close the trade. So I'm going to go through all my trades quickly for the month, closed trades for the month of January. There are about 50 trades, but they go quickly. So you'll see they're grouped by 4, especially if they're put spreads, because for example, these 2 lines here, this is a put spread that I opened. So as you can see, I collected more than I paid. I sold the 1720 and I bought the 1715 option, put option. So combined, it's a credit of $82. But then, I did this December 24th, but then January 2nd, I had to close the trade for a decent profit. So I paid $315 and I collected $282. But the combined trades gives me a profit of $49.06. And this is after commission. So this is net profit. So this put spread here that I did in about a week, it had an expiry of January 24th. So you could see that I opened it December 24th with an expiration of January 24th, but I closed it January 2nd. I didn't have to wait till January 24th, and I closed it for a more than 50% profit. Net profit on this was $49.06. And then January 30th to January 31st, so one day between them, another put spread, collected $72 in net profit. So this was an earnings trade on Amazon. I placed this trade before earnings was announced and I closed it the next day. This is when Amazon jumped to 2,000. But I actually have a video just talking about this trade alone. You can check it out below. So on this put spread on Amazon, $72 profit. And then Citigroup was an earnings trade, but I did an iron butterfly, not a put credit spread. And this one is a combination of these 2 amounts here. And it's a small profit of $18. So it's all these trades here. So that was a small profit of $18 also in one day. So as you can see, January 13, closed it on January 14. Costco was a put credit spread as well. I opened it January 2nd, closed it January 8th. So Costco was a put credit spread, opened January 2nd, closed January 8th with an expiration of January 31st. So closed in less than a week. Made a $17 net profit on that one. So Delta Airlines here, it was an earnings trade, so one day between them. So open January 13 with an expiration of January 17 and closed January 14. So this was an iron butterfly trade, but as you can see, I lost money on this one. I lost about $45 on this trade here. Moving on, DIA, another put spread, opened December 18 with an expiration of January 17, but I closed it January 2nd, so about 2 weeks. I made a net profit of $35 on this one. Another put spread on DIA opened December 24th with an expiration of January 24th. So you could see that I'm always going for 30 days expiration. I closed it January 9th, so less than 2 weeks, and I made a net profit of $31. Once again, this is after commissions. So anyone complaining about Questrade commissions, you could still make money. So another put spread on DIA opened December 31st with a January 31st expiration, 30 days again, but I closed it January 8th. So this is about a week, and I closed it for a $25 net profit. And then another put spread on DIA opened January 8th with a February 7th expiration, but I closed it 1 week later. I closed it January 16th, made a $25 net profit as well. And then Facebook was a put spread that I opened January 8th with a February 7th expiration, and I closed it January 13, so about a week later. Didn't have to wait till expiration, and I collected $27 net profit on that one. This is another put credit spread on Goldman Sachs, but this was an earnings trade, so I put this on before earnings, but I was only able to close it January 17 for a net profit of $17.08. And then December 18, I opened another put spread on IWM expiring January 17, but I closed it. So I closed this one January 8th for a $34 net profit. Got another IWM put spread, opened it December 24th, closed it January 13, so about 2 weeks. This one had an expiration on January 24th, closed it for $17 net profit. Another put spread on IWM that I opened January 2nd, closed January 13, so 2 weeks. This one one had an expiration of January 31st. So you can see that every week I'm selling a put spread. This time collected $25 net profit, or I closed it for a $25 net profit. Another put spread on IWM opened January 8th, closed at January 15th. So this is 1 week with a February 7th expiration. So when I opened it, so this one after commission was pretty small, only $12 net profit, but I also only collected $45. And then I had this earnings trade on JP Morgan, opened January 13, closed January 14. It was an iron butterfly, and as you could see, I opened it for $216, but I had to close it for more. So it ended up being a loss, a combined loss of $8, net loss of $8. And then here's a put credit spread on MasterCard, opened December 24th, closed January 7th, so less than 2 weeks. This had an expiration of January 24th, so and my short strike was 287.5. And I ended up closing it for a net profit of $30. Another put credit spread on MasterCard, I was doing these every week, opened December 31st, closed January 8th. So as you can see, in 1 week with a January 31st expiration, collected $31 net profit. Another put credit spread on MasterCard, this one 3 days apart, opened January 6th, closed January 9th with a February 7th expiration, so didn't even come close to the expiration. Was able to close it for a $37 profit. And then finally another one on MasterCard, January 15, opened January 15, closed January 21st, so that's 6 days apart with an expiration of February 14, so I didn't have to go all the way out till February 14. This one had a short strike of 297.5, and I closed it for a $28 net profit. So what I like about these put credit spreads is they're very effortless. I don't have to read any charts, any indicators, I don't do any technical analysis, and I give myself so much room to be wrong. Even if I'm wrong, I can still be right. So what I mean by that, for example, on this trade here, my short put was 300 while Netflix was trading in the 330s. So all I need is for Netflix to be above 300 come January 24th and I make my profit. Netflix can go from 330 and up, but if it decides to come back down or drop, I still have room for Netflix to drop and I could still make the same amount of profit. But of course, if it goes up right away, then I can close the trade earlier. If it doesn't go up right away, then I'm still stuck in the trade until expiration. That's the only difference. So on December 24th, opened a put credit spread on Netflix with a January 24th expiration. I closed it January 14th. So as you can see, this one I had to hold it for a while, for about 20 days. Instead of most of my other spreads, I was able to close them in a week. This one I had to hold on to it for 20 days. So I only had 10 days to go before expiration, but I came out with $35 net profit. Here's another put credit spread on Netflix, December 31st that I opened. I closed January 8th. So this one I closed in a week with a January 31st expiration, 290 short strike. I collected $45 net profit. Here's another one on Netflix, opened January 8th, closed January 22nd, so 2 weeks with an expiration of February 7th, collected $29 net profit. Here's another one on Netflix, January 15th, opened January 15th, closed January 23rd, so about 8 days with an expiration of February 14th. So it actually expires this week, but I closed January 23rd, collected $30 net profit. Here's another one on Netflix, opened January 22nd, closed January 23rd, so this is 1 day with an expiration of February 21st, collected $30 net profit as well. So this is really beautiful. Now to the Qs, more put spreads on the Qs. So opened December 24th, closed January 8th. So that's about 2 weeks with a January 24th expiration with a 208 short strike. Closed it for a $41 net profit. Another one over here, January 2nd, opened January 2nd, closed January 14th. So about 2 weeks with a January 31st expiration with a 205 short strike. Collected $27 net profit. So not as much, but still profit. Another one on the Qs, opened January 8th, closed January 17th, so 9 days out. So closed it in 9 days with a February 7th expiration, $28 net profit. Another one on the Qs, January 14th, closed it January 24th, so 10 days, closed it in 10 days with a February 14 expiration. So I opened January 14 with a February 14 expiration, always 30 days. That's what I go for. But if I can close it earlier, I will. So in this case, I close it in 10 days as opposed to 30 days for a $26 net profit. My max profit on this trade is about $58. But because I closed it earlier, I got $26 only. All right, now going to the SPY. I've got plenty on the SPY. Open December 20th, closed January 8th. So about 18 days, $27 net profit. Open December 23rd, closed January 8th, $20 net profit. Open December 24th, closed January 8th, $23 net profit. Open December 25th, open December 27th, closed January 13th, $39 net profit. So this is a good one here. So this had a 319 short strike. I opened it for $69. I was able to close it for $30. This one here opened December 30th, closed January 9th. So 9 days, less than 2 weeks, $37 net profit with a 315 short strike. So a lot of room to be wrong. I think the SPY was trading in the 320s at that point. So this one here, you can see it shows a loss, but it's not really a loss. I'll explain why. So this one was open January 2nd, closed January 3rd. This one here was open, the one that comes after was open January 3rd, but also closed January 13th. So I closed them together. So the commissions, the amount of commission seems to have gone on this line here, but the commissions include this transaction here. So this is actually, these were closed together. So you could say that together they had a profit of $42 net profit. So this was open for 53, but it was definitely not closed for 67. This was open for 56, but was definitely not closed for $0. So you could see there's something wrong on this line. It seems like they put everything on this line here. The breakdown of the commissions, because I did this trade and this trade together. All right, this one was open January 6th, closed January 9th. So 3 days. In 3 days, $21 net profit. What I like about these is that I don't have to wait all 30 days. That's amazing. Even though I'm getting a smaller profit at the end, but it's less stress, less risk on the table, because anything can happen in the last week. The market can drop really fast if it wants to and erase all the profits. So this one here opened January 8th, closed January 16th with a February 7th expiration. Closed it for a net profit of $24, so about 8 days. This one here opened January 10th, closed January 22nd, net profit of $28. This one here opened January 13th, closed January 22nd with a February 12th expiration. Closed it for a $14 net profit. Now if I had held on to this till expiration, of course I would have kept the full profit of $49, but of course I don't, at that time on January 22nd when I close it, I don't know what's going to happen on February 12th. So why take the risk? And then beautiful Tesla, did a bunch of put credit spreads on Tesla. Of course, with Tesla going up like that, any put credit spread you do is going to be successful and most likely will expire worthless. But I closed them early, of course. So I opened one December 24th, closed it January 3rd for a $37 net profit. And then another one December 31st, closed it January 6th for a $40 net profit. Another put credit spread on Tesla, January 8th, closed it January 21st, $37 net profit. So this one I held on to it a little bit longer. This one here opened January 15th, closed January 22nd. So exactly 1 week, $36 net profit. This one here opened January 21st, closed January 29th. So 8 days, $34 net profit. Now Trade Desk, a random put spread on Trade Desk, because I think on that day it dropped hard. So that's what attracted me to, that's what encouraged me to do a put spread on Trade Desk, because it dropped hard and I still went with a strike much lower for extra protection, and I collected a decent amount. I collected $83 to open the trade, but I closed it for $51, so I made a $32 profit, and this was about a 1-day trade. UNH was an earnings trade, opened January 14, closed January 15. So on January 14, before earnings was announced, I did a put credit spread on UNH 30 days out though, so expiration is February 14. I collected $73 to open the trade, but then the next day when earnings was released, there's a volatility crush in the premiums of the options. So I was able to close the trade for less, so for $43. So it gave me a net profit of $30. But I did this in 1 day. Wells Fargo was an earnings trade. I did an iron butterfly. So it's a different option strategy. But this one, as you could see, it was a 1-day trade, but I lost money on it. So I opened it for $118, but I had to close it for $174. So I lost about $56 net loss on this trade. So these are closed profits for the month of January. So these are trades that I opened either in December or in January, but I closed them in January. Because once they're closed, then they become confirmed profits. I do have some other trades that are currently open, but because they're not closed yet, I cannot consider them profits yet. Closed, these are definitely the closed trades for the month of January. And the total, if you want to see the total, it gives me a total of about $12.34 US. So that's not bad for the month of January. And that's the margin account. Now, how much capital did I use to make these trades? Well, it really depends because every trade has its own amount of capital, and the trade didn't stay open for 30 days. Many of these trades I had open for days, some I had open for 20 days. So it's hard to say how much capital was used to generate this $1,200 net profit. But for example, on this Amazon trade, the capital required was about $420. On this trade here, it's about $410. But as you can see, this one was closed January 2nd. This one was open January 3rd. So the capital that I used here is not necessarily the same capital I used here. So the capital that I used here could be the same capital that I used here because they weren't open at the same time. On this Costco put spread, for example, the capital required was about $450. On MasterCard, for example, here, capital required was about $430. So the capital required for all these trade varies. It's between $400 and $450, but they weren't all open at the same time. So it's hard to say that I used $400 of capital times all the number of trades I did, because most of the time it was the same capital just being reused. But let's say they all had their own capital and open at the same time, and I had about 50 trades, and let's say on average it's about, let's say, $420 capital required per trade while it's open. So it's about $21,000 of capital required to place these trades, and I said it was about $1,200 net profit, so about 1,200 divided by 21,000, so that's about a 5.7% return in 30 days. So even with all the commissions paid, and even though they're small profits, but because there are many trades, it ends up being a 5.7% return on a $21,000 capital. But that's if I use $21,000 at the same time, but I know I didn't, because as you could see just in the first few lines here, this was open December 24th, closed January 2nd. So this was open January 30th, closed January 31st. So this could have been the same capital used. And right away, Citigroup, same thing, January 13, January 14. So they were not open at the same time. Therefore, it's the same capital used. Costco, for example, January 2nd, January 8th. So they're all outside. All these trades are outside of each other. But as you can see here, this one January 13, January 14. This one here is also January 13, January 14. So in this case, I needed an additional capital to place this trade. But the capital in this trade actually, even though it's, first of all, it was a loss, but the capital required for this trade was very small. It was actually only $70. So it's definitely not fair to say that the capital required for this trade was $21,000. In fact, the best way probably to know how much capital was used is to see my balance, to see my buying power reduction throughout the month, the highest it was versus the lowest it was. And I don't think it had, and based on that, my maintenance excess was ranging between 32 and maybe 26,000. So that means the difference is how much capital I was using, or the most capital I was using in one time. So I would say maybe $6,000 of capital was used at one point. So if I use that as a capital required, then 1,200 divided by 6,000 is about 20%. Now, this strategy works very well because right now the market is on fire. Crazy rally, crazy bull market. This strategy works very easily. But what's going to happen if the market drops? So I haven't really tested it in these conditions. I still think it would work. It's just going to be harder to manage. But for now, this is a strategy that I'm using. And I will do a video explaining why I think put credit spreads might be the best strategy in all market conditions. But it is going to be a long video that really explains historical prices and probabilities. So I want to take my time in preparing it. All right, so if you have any questions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.